How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I have a great interview today. We're going to be talking with Mark Ritter, who is the CEO of MBFS, and his company does some really great work with credit unions. We'll ask him where it is, but I'm pretty sure it's around the mid-Atlantic, East Coast type region of the U.S., but we're going to bring Mark in and have a great conversation with him. Mark, how are you doing today?
I am doing great. Thanks for having me. I'm looking forward to the conversation.
Yes, thank you so much for joining us today. So, if I can start off today, I just want to read a little bit that I actually got from your website, and then I'm hoping you can kind of expand upon this. But so MBFS, that stands for Member Business Financial Services, and the company is described as a credit union-owned company designed to allow credit unions to fund loans to small businesses and real estate investors in their communities. MBFS provides support services such as underwriting, documentation, loan servicing, and SBA loan support. MBFS also has their own team of sales professionals who can meet with you and match you up with your ideal credit union. So I thought that was a very interesting description of your company and what you do. And so I was just hoping that maybe you could expand upon that a little bit for us. Maybe tell us a little bit about the history of the company, how this came to be, and kind of what you guys do.
Sure. I've actually been in credit unions 25 years. And when I got involved with credit unions, business lending was a speck on the asset size of credit unions. It was a nothing business, which is probably why the credit union hired me to start up their business lending operations. So what there was really a renaissance of a lot of companies like us being formed. And when the laws changed that allowed credit unions to get more involved in business lending, credit unions work together across each other very well. They're friends with each other and do business together often. So instead of everybody hiring an expert and hiring a credit analyst and buying systems and buying credit analysis software and loan doc systems, people said it would be a lot cheaper and more effective if we formed a company that did all this, owned by the credit unions, and then provide those services. And it's really become a boom for our industry to be able to offer business loans to their membership with very, very low costs and overhead. And they're really just using the services, pay for using the services rather than spending $500,000, $1 million to get a program started.
Yeah, no, absolutely. I was really fascinated, Mark, when I heard about your company because I didn't know that anything like your business actually existed to help credit unions out there. And I'm just curious, did you guys kind of focus on one thing in particular? Like, I'll give you an example. Like in the banking world, like with community banks, there are a number of companies out there that you can kind of have like an outsourced SBA department.
Yep.
So, I mean, did you guys kind of start in that fashion and then expand your services? Is that kind of what happened?
Yeah, we've really tried to be what I would describe credit unions as the marketplace is small balance commercial real estate, investment real estate, and then small business lending. A lot vehicles, lines of credit, buying their own place, getting into SBA 504s, helping out with the 7As as you see fit. Credit unions, they're not strong. We're not strong as an industry. If you want us to be development lenders, if you want us to be floor plan providers, that's not our strength. Much more of what I would say is what we are is what that typical community bank structure looks like. That's probably a better profile, and then provide those services. Now, in that world, the one thing is there's nearly 5,000 credit unions today.
Wow.
So there's still, it's it's such a varied industry. There's credit unions for specific. We just signed up a credit union that serves Nepalese immigrants.
Okay.
So you have, church-based credit, faith-based organizations helping different migrant communities, helping, and then there's people, they help the traditional everyday business owner. So it's such a varied industry. We try to really fit to their credit box versus, just telling them how it is. We really try to mold it around who they are and support it and help them build expertise, scale systems to help their communities.
Yeah, and so, and I look at it like this too, Mark. Like, I think a lot of credit unions have traditionally focused on like auto lending for consumers, like consumer auto lending, and a lot of consumer type loans, home equity loans, personal loans, things of that nature. Does your company get into helping with those kind of things as well, or is it more just strictly like business loans, SBA lines, things like that?
The only thing that we do is if it's business purpose.
Got
And
it.
you got to remember, most credit unions max out at maybe 10% business lending assets on their balance sheet.
Yes.
And the other piece is we bring expertise.
Hmm.
We don't need to bring expertise to a credit union for mortgage lending, for auto lending, for credit cards, consumer loans. They're powerhouses in that.
Yeah.
They when 90% of their business is consumer based, it makes sense to invest millions of dollars into systems and people. For this, that's more of a niche of their service. They're not going to build it's the exact opposite of the community bank world.
Hmm.
But I always like to think, well, if the community banks had this structure where it could lower their overhead, maybe there'd be more community banks in this world or less of them getting gobbled up.
Yeah, no, I mean, it is a real challenge. I mean, in the community bank world, what you were talking about a couple minutes ago about, the amount of money that you have to invest in terms of, having underwriters, having all these different types of software programs. If you have to, spreader software or financial statement analysis software, or if you're doing some kind of automated small business lending platform, like it just this technology can get very expensive very fast, and and all of that adds into your average underwriting costs on your loans. So I think to what you're talking about, yeah, if you can have a smart way of reducing your underwriting costs, I mean, you're just going to help the bank be able to expand, do into new product lines, offer new products to their customers, and help with their profit margin at the end of the day. So I think it's like a win-win all the way around.
Yeah, we use Encino as our loan origination platform, which is, if you wanted to buy it today, you'd be looking at $500,000,
Yeah.
and it's used by, over half the 20 largest banks in the U.S. Well,
Hmm.
we're bringing our credit unions top-notch technology and systems that all the big guys have.
Hmm. Yep. No, which is incredible for a fraction of that $500,000 cost that you mentioned. You know.
Absolutely.
Yeah. So, okay. So just a couple other questions around this. Does MBFS, do you only operate in the PA market, or are you guys in other states?
When we were formed by 8 credit unions back in 2008. And at the time, I would call us a regional player. New
Okay.
Jersey, Delaware, Pennsylvania, in those areas. Today, we work with over 100 credit unions nationwide.
Oh,
We
nice.
work with credit unions, which are called cooperativas in Puerto Rico.
Okay.
We have clients and staff members all across the country.
Nice. No, that's really curious, because that's one of the things I was curious about, because I wasn't sure if you were just kind of in the Mid-Atlantic region or if you guys were in fact across the nation. So definitely thank you for clarifying that. I'm sure there are some credit unions that will end up watching this that will say, "Oh, that's interesting," and we'll probably end up reaching out. But Um, so, and you did answer the question about the credit unions, the fact that you guys are owned by a number of credit unions. So do you kind of consider yourselves like a co-op, or are you in fact just your own entity and you just happen to be owned by a number of credit unions?
The legal lingo for us is CUSO, CUSO, which stands for Credit Union Service Organization.
Okay.
And think of this like a bank subsidiary. A bank can't own a title company, so they form these other little companies and offshoots to do this. Credit unions form CUSOs for everything. There's
Okay.
mortgage company CUSOs, there's indirect lending CUSOs, there's IT CUSOs, there's compliance CUSOs. Any function you can think of in a financial institution, credit unions form CUSOs for, to cooperate, because credit unions are cooperatives and they cooperate among each other, and they form these hundreds and thousands of companies across the US to serve themselves that are owned by the credit unions for the credit unions so they can pass it through. You name an aspect of the financial services industry, and there's a CUSO for it in the credit union space, which is, I really enjoy doing it because I get to work with a lot of different credit unions.
Nice. Very, no, that's great. And thank you for explaining that. I just learned something new. I'd never heard of a QSO before. So that's very interesting. But again, another point as to why I wanted to have you on here today, Mark. So is there anything else about the business that you would like to maybe point out right now? Like, do you guys have any new initiatives or new product lines or anything coming out, or anything that you would like to highlight?
Yeah, we're really digging deeper, much more. Credit unions, like everybody else, were swimming in deposits for years, and that obviously has changed, just like the community banking experience days. So we're really focusing much more, as much as loans, on bringing in those relationships that can bring deposits. SBA loans are a great way to manage liquidity, those business types of relationships. And really, and the other piece is just overall investing in systems and technology. It's all, anybody in business lending, this is the worst segment of financial services with regards to using technology and systems. So we've really been focusing to make that experience better for the small business, easier to manage for the credit unions, and it's really just increasing in size and complexity. I know, and raise your hand if you're a banker listening to this, that is dismissing credit unions' involvement in business lending. But we're funding $50 billion of it a year. So it's really we have the same pressures with regards to compliance and systems and monitoring. So it's really, just taking what was once this small micro segment and helping just build it and scale it so people can lend responsibly.
Yeah, no, and that's a great point that you make there, Mark. And look, I will say, to be fair, the only thing about credit unions I have ever been critical of is just the tax issue. That's the only issue that I have with credit unions. I have no problem with credit unions making business loans or doing different things. I have no problem with that. It's just that because, like, I'll use the PA market for a second. In the PA market, I mean, we have a number of credit unions that have now become real competitors. I mean, these are multi-billion-dollar organizations, and they operate and act, just like any other bank in the market. And it just, like I said, it beckons the question. It's not like you're not a little, $100 million credit union that's only open 3 days a week and only servicing a certain specific, crowd. And so, like I said, that's the only thing I ever get into.
My father, worked at the factory, and they had the corner of the factory credit union for the workers there. And you're right; those days are gone. And actually, some people in my industry, will beat me over the head for this, but I think it's worth a conversation if credit unions get more access to raising capital, because
Okay.
that's one of the X factors on to balance that out. I think if credit unions had, no banker is selling their bank and forming a credit union today.
Correct. Correct.
Because
Yes.
there's
Yes.
no money to be made.
Yes. Correct.
But I think if there was, I think it would be a fair conversation and a legitimate conversation if credit unions had some of their no banker would flip out with the restrictions that we have in place with regards to raising money, but also the lending restrictions.
Yeah, no, I think
It's
you make some great points there, and like I said, I'm in agreement with you, Mark. I think that it's kind of been long past due to have some of those conversations. Like I think that those conversations need to be had. My opinion with the tax thing has always been, I feel like if, and again, I don't know what these levels should be, but I feel like if a credit union reaches, say, a certain level, say they become like a, I don't know, they get to be a $3 billion organization, maybe at that point, some different taxing, some different things should kind of kick in. But also from your point, maybe some other things should kick in where capital, credit unions would be able to do a little bit more business lending, where they can raise some capital, where they would have the ability to do other things. So that way that you have these kind of offsetting kind of conditions and different things
yeah,
like that. So I don't know. I mean, again,
yeah.
I don't have any super answers or anything like that, but
We work with some of a lot of community development credit unions that are
Mhm.
very mission based, helping out sections of the community and just doing God's work, and we love working with them. And,
Yeah,
and then
absolutely.
Navy Federal is a over $150 billion institution.
Yes, they are, and they're coming into the PA market now. Yeah, they're
And
moving in,
yeah, yep. Eh, So
yeah, it'll be interesting to see. I think it's kind of like right now on the banking side, we got Chase Bank has really moved into the Philadelphia market, and they've been adding a lot of branches, and it kind of they're still a relatively small player in the PA market, but we'll have to see what happens over time. And now I'm really curious with the Navy Federal Credit Union, kind of what impact they ultimately have in the market over say the next 5 or 10 years. I think it'll be
I,
very interesting to see how that unfolds.
I really think collectively, credit unions and particularly community banks should work together more
Hmm.
on funding, on business, on common regulatory issues, because our biggest threat to our existence today is the Apples, the Amazons, the fintech people out there coming from all over the world who quite frankly can chew our eat our lunch if they really want to by throwing enough money at it.
Yeah, you're right. You're right. I mean, no, there is, again, yeah, I mean, we could have a whole conversation just on that. So yeah, so you're absolutely right. But if I can, just in the interest of time here, I just want to switch gears for just a second, and I just want to kind of focus in on you for a second here, Mark. So could you maybe give us a little bit of your background, like how long you've been doing this, and kind
Yeah,
of how you ended up where you're at?
absolutely. So I am a native of the coal regions of Pennsylvania, up in Berwick, and a Penn State guy. We are a Penn State family, except for my one traitor son who went to Pitt. But really got into the banking space, typical credit union in the commercial banking space, and also working with a vendor of credit unions or community banks. And I love the community banking space. And when I was looking for the next phase of life 25 years ago, is when I discovered credit unions. And I thought, like this is the culture that I like to lend in. And when I got into credit unions, there was $13 million in credit union business loans in the entire state of Pennsylvania. and almost all of it was Amish loans.
Interesting. Okay.
So
Interesting.
yeah, so I spent 10 years at a credit union in central Pennsylvania, building up their program, and love working with all sorts of institutions. Credit unions are cooperatives, and I loved working with everybody else and helping them. And then got this opportunity, which is doing just that every day, and helping. We were headquartered in the Philadelphia area, and last year I decided to head for the mountains of Sullivan County, Pennsylvania, which for to give some marks, it's where Ricketts Glen State Park is, and many people have gone there hiking and camping. So yeah, I'm out in the middle of nowhere now, with a full-time remote position.
That's awesome, man. That's great. And that is a great spot out there. Very beautiful. Just very picturesque. I think for a lot of people that may think of if you have images in your head of kind of the classic fall or winter type seasons in PA, that area would definitely fit the bill. So
it's beautiful. We love the outdoors. So
nice. That's really interesting, Mari. You have a very interesting background there, and I love the enthusiasm. I love your passion for wanting to work with credit unions. I mean, you absolutely feel that just in your sense,
Yeah, and if any banker wants to talk with us about working together, I won't tell anybody.
I love it. Okay, so I always end interviews with a couple of kind of interesting questions. I'm very much I'm an avid reader, but I also like a lot of kind of like pop culture. So to try to bring this into that fold, I always ask everybody: do you have a favorite business book? And do you have a favorite business related movie, like The Big Short or Wall Street or something along those lines?
My favorite book series and podcast series is the whole Freakonomics series.
Ah, okay.
I love it.
Yes.
And because it's more about why things happen and how things happen, and not so much analysis. And I always focus on that section. Boy, I don't know if I have a movie, other than with my favorite one, the Michael Keaton holding the big cell phone from the 80s, which would be Wall Street.
Yes.
My finance class in college, that's all we did was watch clips of that. So that always has stuck with me.
Nice. One of the ones I've gotten more recently was The Bank of Dave. I don't know if you've heard about it. It was like a movie that was on Netflix about this guy in the over in London who basically said, he was kind of tired of dealing with the big banks and wanted to start his own bank. So it's a good story. It's a good story.
It's very similar to how credit unions are formed.
Yeah. Definitely not unsimilar to that. So, but I like the Freakonomics stuff. Like I remember, I saw I think it was a documentary on HBO, maybe a number of years ago that they did. It was really interesting. It was I would highly recommend anybody, if you've never read the book. Was it Freakonomics? Right, is the book?
Freakonomics. There's a couple different ones out there, and their podcast series is great too.
Yeah, definitely. Yeah, anybody who hasn't checked that out should definitely go check it out, because they do talk about some really interesting and fascinating stuff. The way that they kind of break down some of the economic analysis and things that they do is really interesting. Really falls into the world like behavioral economics too, like a lot of different things in there. So a lot of good stuff. So, okay. Well, David, before we wrap up here, if anybody wanted to contact you, what would be the best way for them to do that?
Sure. You can go to mbfs.org and send us. I'm very active on LinkedIn. I'm on there all the time. And also my personal website, markritter.com. And you can connect with me for the business right on there as well.
Oh, fantastic. Excellent. And I just want to say thank you so much for coming on today, Mark. I really appreciate you taking the time with us. I think this was a really great interview. I just found your business so interesting in what you guys do in serving the credit unions, across the country. And I hope you will come back and join us again sometime.
Absolutely. Enjoy the conversation.
Great. Excellent. Thank you, Mark. All right, everybody, that was Mark Ritter, who is the CEO of MBFS, serving credit unions across the country. I hope you enjoyed this episode. If you did, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. If you have any comments, please be sure to leave them down below, as I always love getting back to everybody. Please check out some of the other content on the channel, and I will be back to see everybody again real soon. Thanks a lot, guys.